Silicon Valley Bank has failed and regulators have taken over the bank. Let's talk about what that means and why that occurred. Rule one in banking is that you shouldn't run out of money, and that's exactly what's happening right now at Silicon Valley Bank. As of Friday, March 10th, regulators from the FDIC have taken over the bank and are now in charge of its deposits. They've already set up a new banking entity, and they say that checks written from the bank are still going to cash. The FDIC has said that any accounts that have insured balances will be able to access that cash as soon as Monday morning. The real question is what happens to the amount over the insurance threshold. This could become a little problematic for some startups though, because the FDIC, the Federal Deposit Insurance Corporation, is going to insure amounts up to $250,000. Anything over that could result in being issued a certificate, which means you are first in line when they liquidate the bank's assets. The problem started earlier this week when SVB announced billions of dollars in losses and that they were raising capital to cover that. It raised questions about the liquidity of the bank. The result was that venture capital firms started advising their portfolio companies to liquidate their holdings from the bank. This is a run on the bank. That's exactly what banks don't want to occur and the reason that specific thresholds exist. Why was SVB needing to raise capital to cover their funds? It's because at one point they actually had too much cash on hand and they invested it into government bonds and other things that gave returns that were at a pretty low rate. That occurred when there was huge amounts of money flowing in to startup and tech companies. Now this year in 2023 and late into 2022, those deposits slowed down and that changed the amount of money that the bank needed to have on hand. So they're going to have to liquidate some assets to cover their liquidity. They had to sell it for a huge loss, and that's where this whole thing started. How could this become problematic for businesses and funds? Well, businesses and funds need their funds. If there's a lockdown on that cash or that capital, the outflowing withdrawals could be frozen or stopped or capped until they can determine how this liquidity issue is going to be covered. Overall, it's probably going to end up being a huge inconvenience. And if the bank can't manage to cover its assets at all, you could end up with a lot of people that just see their cash turn into vapor. That's not a good thing when it comes to your relationship with your bank. Stay tuned. This is a pretty fluid situation. There seems to be new information coming out every day, but overall right now, the bank's a goner.